Hello, YouTube. Justin here. Today we have options expiry and focus for tomorrow, and the market had an incredible snapback for a 3-day gain that is impressing me. We are really close to the bulls actually claiming victory on the chart if they can hold off for one more day. So the three things we're going to review today include $72 billion being deleted in premium or torched. S&P closes out for its best 3-day gain since November of 2020. And then NASDAQ 100 closes up 1.2%, gains 1.3% on the day. So there's a lot for us to go through. Let's jump straight in. If you're enjoying the video at any time, please smash a thumbs up and drop me a comment. So the first thing we talked about here was that there was $72 billion in option premium that is torched today. So we can find that out by just looking here and seeing that total gamma is going to be negative 11.94 billion per 1% move on the S&P. And from low to high, we're up by 6% on the weekly for S&P. Actually closing out right here at the 50 weekly moving average. We're off by about 17 cents as of the close at 441. And what that means is that they've deleted about $72 billion. Why? Well, we go 6% times 11.94. That gives us roughly 72 billion. And we can see that here in a few different ways. So first thing we can look at here is going to be the options chain for today. And this right here shows March 18th, monthly chain. It is going to be triple witching today. And then we got quarterly expiry at the end of the month. We can note here just that all of the puts, so all the open interest, we got 50,000 here at 440. We got 38,000 at 435. There's all this premium. So by pushing it up, notably to 440, here we are. They managed to burn all of this. And it's not only for this chain. And looking forward to a different way. This is on our portal. We can note here that I want to go back in time to early in the week before Jerome Powell spoke and see what people were buying, because they bought in anticipation of buying insurance, because as long-term investors of a portfolio or a money manager, you can't just go and liquidate billions and dollars in stock as easily as you can to buy insurance. So that's what they do. Here we're going back to Tuesday, which was the first day of the FOMC. And we can note that for the top 25 indices, which is where I'm focusing because it's what I noticed where the flow is, there's not a whole lot going on. It's all puts, right? We got puts for June. We got puts for May, April, April, and one call here. That's for 4,400, which is ironically where we closed today. Looking forward to Wednesday when Jerome Powell spoke. We can also note that, again, on the, why is it not showing the 16th? Okay, there's the 15th. There's the 16th. All right. So again, top buys here are puts again, right? All puts. It's basically all puts. We got 4,400, 4,500 for April, but otherwise it's very muted. So what happened here is that all this premium that was bought early in the week, in addition to the premium that is expiring on Friday, pretty much all got burned. That's how efficient these guys were burning the premium. Next thing to look at here is just going to be that going out to April expiry, we can note that it's pretty muted here. I don't see a lot of volume or open interest, which means that people are not really rolling forward. And the reason why that could be a concern is because, again, when there's $72 billion on the line, what we could be seeing, again, potentially is either just burning premium, or we're going to be seeing that we're going to get continuation. And because we're now testing that 50 weekly moving average, the move from here into next week is going to really matter. There's a few more things for me to go through. So I'm just going to explain one more thing here, because I've traded through enough of these expiries that the one thing I will be watching for tomorrow is whether or not they call in one side. And what I mean by that is I'll take another screenshot here and I'll draw to show you what I'm talking about. So when we look here at the chain for tomorrow, which is going to be the 18th, if we are going to get continuation, I would expect that we're going to see open interest on a lot of these strikes into tomorrow, which means they're not going to close them out. If we're going to be getting a cuck move, which means they're going to call in one side and then call in the other, this whole side here is likely going to be empty, notably all the way up here to about 441. And the reason why they do that is because they want to call in one side and then they want to go after the other side, right? They want to double dip. Because when you're buying a straddle, you're actually buying both sides. You're buying the call and the put. So if these straddles want to get double dipped, we're going to see that the calls are going to be zeroed out for the open interest, And then these numbers here for open interest on the puts are going to remain. So that'll be the telltale sign that I'm going to be looking for tomorrow. And we're only going to know that overnight. The second thing I want to point out now is, again, we know that the S&P is now closing out its best 3-day gain since November of 2020. Yesterday, we were talking about March of 2020. So what I want to do is actually go back in time and have a look and see what happened during those periods relative to where we are now. And down over here, we got, we got April of 2020 about right here, right? We're coming back up, we're reversing. And then we got November of 2020. That is when Joe Biden got elected and we left that original 400 gap on the chart. Where are we here? There we go. So here is Joe Biden. So the last 2 times that we've had a violent move higher like this, it led to a melt higher. So what I'm looking at specifically is what happened here around May, because we went below the moving average. We came back above, right? We came back up into here. We do a start of a reversal. We butt up against it. We get continuation into the new week. We push higher. We back test the 50 weekly and then melt up. I could see this happening now. I would see this happening because there's a few things which are actually driving us to go higher. But what's more important than that is price action. And when we look back to here, we got a big old green bar. We got a pretty solid volume move so far for this week. And what I would note is just that we're now closing again. In post here, we're at 440 in post trading, meaning post market. The close, 440.107, which means we're about 10 cents off the 50 weekly moving average. It's pretty impressive. So the stage is set for a reversal. We're now invalidating this bear pattern. And we're no longer really going down. So we've broken the funnel going down. And we can note here that we also saved the low of the week. And the reason why this low of the week is really important to me is because I'm usually early on the entry and on the exit. So what I want to point out here is something that a lot of people actually thought that I was wrong. And it's not that I know everything, but in hindsight here, I was 1 week early. I was calling out bear for at least a few months. And then I said almost over. So what I want to do right now is actually go back and re-review the almost over. And then I'm going to go through and talk about, again, the key dates that we had going into this week. I'm going to talk about why bull or bearish and if anything's changed going into Friday. And then I'm going to talk about my base case because now things have changed. So let's go back to here. Inside this video, which we will queue up at the end, and I'll mention that again, is that we were talking about the monthly chart and the quarterly chart potentially going into a bottom. So as we look here, we know that the end of the month is going to be the end of the quarter as well. We're sitting here at March 17th, or roughly halfway through the month. And looking here at the monthly chart, what do we got? We have an inside bar. So we have a higher low and a lower high. So that tells us that, cool, this looks pretty good. The last few times we saw this aggressive dip buying into here, the last 3 months, we got 3 big old tails. So every time it gets sold off, someone buys it up. Gets sold off, someone buys it up. Gets sold off, someone buys it up. And the reason why this is important is because we're breaking the downtrend and we're ready to start going back up. Getting back above 428 was the clue. Getting back over 438, even better. And then back over 440, 452 would start to confirm it. And again, we need to get back above roughly 460 to break bullish. So that is where we could do that push-pull. Going back to our weekly chart where we look back to March of 2020, and we note that, hey, well, that would be us like pushing up to roughly testing our neckline at 454. So we got 454.04 on S&P, and then we back off to test the 50 weekly, and then we can advance. Where? I don't know, but that's how I see us going to a new all-time high. And at least for right now, what will normally happen during an interest rate environment is that we will rally for the first month to few months as the market digests the move. And when the market usually rolls over is when we hit that breaking point where there's too much interest and the market is now scared we're going to fall into recession. What Jerome Powell basically said yesterday is that we're not going to go into recession. We don't know if he's going to be right. And the data points come out every month. So we have to just keep that in mind. So now as we go forward to the last few things here, the key dates, all the key dates are pretty much out of the way now. We got OpEx tomorrow, so it's going to be pro time. This is going to be triple witching because we have 3 expiries at the same time. Quad witching happens every second quarter, And for now, we're watching the OpEx for tomorrow with the options expiry. And then we got the end of the quarter, which is also very important. Again, watch the weekend review if you want to know everything about that. And then we're talking about bullish or bearish. So I think what's important for us to keep in mind here is that we have the why are we bullish, why are we bearish? So instead of trying to get trapped in our emotions, we can just look back to the homework that we prepared and see whether or not anything's changed. So as I look forward to the list here, what I notice that the monthly bottom, it's holding, right? Monthly bottom's in. We're near the high of the month right now. Peak hawk in geopolitics. So Jerome Powell pretty much walked it back. And then we saw that the BOE, or Bank of England, raised interest rates again today for the third time back to back. And they actually provided a little bit of a dovish surprise. So they raised interest rates, but provided a dovish surprise. And right, geopolitics, Joe Biden is going to be speaking with President Xi tomorrow morning. They have a little bit of rhetoric out ahead of time, but we already know that I mentioned this on our private stream this morning. Again, join us if you want to see what that means. President Xi has already backstepped some stuff on Wednesday when he said that we're going to work together on dual listing stocks. We're going to start the tech. We're going to stop the tech crackdown. And I think that there is potential for a resolution coming in here. Again, I want to see it actually get confirmed. But as of right now, it's looking promising, which is what I was trying to lay out about 2 weeks ago. For the bear market here, going to number 2, I'm just going to go back to here so you guys can read it. Wheels are in motion. Well, the wheels are in motion, but everyone knows the playbook now. Everyone knows inflation is elevated. And again, per Jerome Powell, who is Dr. Money, if he tells us that there's not going to be a recession and everything looks clear, well, we don't fight him. We don't fight the Fed. Peak cycle, well, that's arguable right now. Why? Well, the tape doesn't lie. The tape is all-knowing, so it's digested it and it's moving up. Inflation narrative. Well, Jerome says 3.8 is what we're going to smooth out to. Right now, we're well above 3.8, but he's going to have to get proven wrong with multiple data points. And when he was on team transitory and then inflation started rocking higher, we didn't actually sell off on the market. So the inflation narrative is likely going to be a slow drip. Finally, looking forward to the base case that we had. I don't know the bears are in control anymore. They failed to use the headlines to drive us lower. I'm also noticing that, again, we're getting more and more headlines out of Russia and the Ukraine, and it's not moving us lower. Happened in pre-market. We put in a higher low in the hourly. We got a headline for, again, a really bad thing. I don't want to say what it is. Another higher low and a higher high, and we close at the high. So that's bullish. And then I'm seeing that into April, we could still get that relief. So we could push higher, settle back down, and then advance. That's for the quarterly chart. So what this tells me at a high level is that as the data changes, so does our approach to investing and trading. So now let's have a look at the normal ETFs and wrap this show up. Hopefully you guys are enjoying these videos. I know I like doing them. I think I'm getting better at my process. And if you enjoy them, I would really appreciate if you could smush that thumbs up and show me some support. All right, let's go to a weekly chart here. We can note that we stopped going down. We got a higher high and a higher low, engulfing candle. Look back to 2 weeks. Our high here is 441.11. What's our high here? 44106. Technically, that is a double top so far, but with the bulls in control, what's important for us to note is that when we close at or near the high of the day, what that means is that pressure is building up. And right today, we got a green dildo. So it means that we gap down, pumped up, and the pressure is built up into the close. There's a lot of pressure. The pressure releases the next day when we continue to go higher. So if we want to get over that 50 weekly moving average, we're right there. Just got to push a little bit higher. After that, the next natural resistance is going to be here on the daily chart. And we got that here at 442.69. And then we got 445.84 for the 50 and 200-day moving average. Also important to note that we bull pivoted off of the green line here, which goes back to our gap, and we blew through it. So we stopped going down. We have an uptrend form now. So what we can actually do is adjust this and now show that we have an uptrend. So here we go. We are now pointing back up. This looks pretty good. I'm not going to lie. Moving forward to QQQ. QQQ also stopped going down. We got a bullish engulfing candle, lower high and a higher high, which means that we just engulfed the whole previous candle. Volume's already on par for last week with a whole trading day left. This looks good. It's got an incredible move. It's up 6% on the week, and off the low, we are up an incredible 8%. That is truly impressive. Over 14,000 on the NASDAQ. Woo! All right, moving forward to XLF. XLF also bull breaking, stop going down. It's going up. It's right here on an important area at roughly 39. Let's see if it can break or if it's going to stall out. It's up 7% on the week. That's a big move too. XLV. Booms. Look at that big power up. It's got a huge advance here. Still head and shoulders with roughly 137, but it's making substantial progress towards that all-time high at roughly 142. Energy also catching a bid because it's not really something that the Fed can control. So we're up by about 3.4% on the day, reversing a lot of the losses on the week. We're still red. We're still trending up. We got a golden cross on the weekly here. It still looks like energy wants to go higher. Looking at Arkk, crushing it, 5% up today. Well, what do we got here, right? Still got our funnel lower. We are still below the green line, which is going to be roughly the base before we launched off to the all-time high. And there's potential here. Keyword being potential. Last two to look at are going to be the Dow and IWM. Again, stop going down. It's rocketing up. Massive bullish engulfing candle. And we would expect that because as people start to travel more, the industrials should do better. And then we want to look at IWM. Booms. Also got a bullish engulfing candle and making a fresh monthly high here. So this looks pretty good. Looks like it might want to reverse. Just needs volume to confirm it. Finally, let's have a look at the heat map. We talked about this at length yesterday. Looking at the heat map today, it is broad-based. We're seeing Tesla and Amazon leading the trillion-dollar company. Berkshire Hathaway crushing it, right? Over 500,000 for the Berkshire A stock, which is not going to split. And pretty broad-based rally. Energy's up, and everything's up. So this looks pretty broad-based. It looks like there is depth and there is breadth. Last thing to go through here is going to be looking at the video from yesterday and finding the top comment. Let's do it. Stefan. Thanks, Justin. I really like the format of the video and the content. It is really instructive. Stefan, thank you for commenting. I really appreciate it. Make sure to email us at info@blazecapital.com and we will get that prize over to you. So last thing I want to wrap up with here is basically just going back to my base case from before and talking about how it's now changing. Why? Well, when what we expect to happen doesn't happen, we need to adapt our strategy and move forward to that. So if you're looking for another video to watch, there'll be one here that queues up. It won't be the weekend deep dive. It'll be the one we talked about where maybe it's almost over. Stock market crash is canceled. If you want to watch that, it'll queue up here in a moment. Otherwise, I look forward to seeing you tomorrow, and I appreciate you watching. Thank you.